Hello, everyone. This is Jeff Wright, Fish Creek Capital. Instead of doing a printed email this week, I just wanted to do another quick video. I've showed several of you this spreadsheet that I created and then a calculator that I'm going to show you here in a second. But I wanted to take just a few minutes and quickly put this out in an email just for everyone to see. And then for those I have not talked to, look forward to a conversation about these two items here. This first Excel spreadsheet. So I've been talking a lot about dividends, dividend growth for our Fish Creek portfolios. This really fits in with the initial strategy of what I've always talked about of looking for good companies that are cash flowing, that have good management, that have low debt. One of the important pieces of that cash flowing aspect of a good company is how they distribute that cash flow back to shareholders. Most of you know that one form of that is in a dividend. Well, this is just a measure that we can use to look for those good, solid companies that I've always talked about as far as long-term investing. The emphasis here, though, is not that they're just paying a dividend, but also that we've got these good companies growing their dividend. You can see in the spreadsheet that I've created, it's very simple, but just to kind of emphasize the importance of these dividends and how it contributes to our overall return. If you just take the dividend yield on a company, say they have a 3.5% dividend yield highlighted in green right here, and they grow that dividend by 10% every year. Again, the emphasis on how much is the company growing that dividend. By year eight, 8 to 10, you can see right here that I've highlighted. By year 10, you're going to have an 8.25% return just on the dividends alone. So by year 10, you're basically going to be beating the historical average return of the S&P 500. So this strategy is really a strategy. It's not new, but it's something that you don't necessarily hear a whole lot about. But this is how you beat the market. You stay focused on the long term, and we're looking for these companies that are cash flowing, that again are returning their cash flow back to shareholders in the form of a dividend, and that are growing that dividend. And if we stick with these companies, we're going to be able to beat the market every year. You can see once we get to year 20 on this kind of a strategy with a portfolio, you're going to have a 21% return every year just on dividends alone. So let me switch real quickly, just for the sake of time, to a calculator that will show you the compounding aspects of the dividends. That spreadsheet did not show the effects of actually compounding the dividend. It was just the straight dividend. So let's jump up the number. The principal amount doesn't really necessarily matter, but just for the sake of having a flat, easy number, let's got $1 million. We're going to have an average dividend yield of 3.7%. We're going to lower the growth a little bit on that dividend to 8.2%. We're going to invest it over 20 years, and we're not going to add any money to it. After the end of 20 years, that $1 million is going to turn into $8.5 million. You're going to have a dividend income every year of $320,000 a year, passive income, and you're going to have a yield on that initial $1 million investment of 32% a year. So every year, just in dividends alone, you're going to be getting 32% return. So this is a kind of a philosophy on investing that I want to keep preaching to everyone on the long-term impacts of how to grow our portfolios and how to grow your income when you need it, whether it's now or later. This works whether you're young or old, have a big account or a small account. It really doesn't matter. The point is that you're reinvesting these dividends, that I'm helping you find companies that are growing their dividend every year. And this is also data-driven investing. I'm not making this up. Like, these numbers actually came, this 3.7% annualized yield with an 8.2% growth. Those came from a portfolio that I've created of about 30 stocks using a historical growth measure of 10 years to actually come up with these numbers. So these are real numbers. Again, we're forecasting this out into the future. This is not investment advice, but we're taking real data to create what we can expect into the future. So as you can see, fairly excited about it. You're going to keep hearing more from me about this, but just wanted to put these two tools out there for you to kind of watch this video and to think about the impact that this will have on your portfolio and on your returns. Hope everyone has a great weekend.